Hi, welcome to the Market Alert for Thursday, the 12th of June 2025. So equities pause near resistance while oil and gold gain momentum. Silver is too as well. Momentum shifting. Watch the tape, not the hype. Yes, I've noticed that there's a slight change in momentum here and also sentiment. US stocks declined as geopolitical fears overshadowed the softer than expected CPI data. Yes, it came in softer, but the market ignored it. Stocks chop to soft CPI and geopolitical tensions as well. Yes, there is talk. Let me just grab this for you of Israel attacking Iran. So US on high alert in anticipation of potential Israeli strike on Iran, WAPO reports. We are watching and worried. We think it's more serious than any other time in the past, which is slightly alarming for all of us, to be perfectly honest with you. There seems to be a lot of warmongering going on, including Starmer with printing billions as well. The whole thing is not looking too good at all. But then you only have to look at the spiraling debt clock, don't you? You know, you can just bring this up for you and you'll see what I mean. You know, you've got a situation where there's 36 trillion of debt there. It's just continuing to spiral out of control. And the same in the UK debt, the interest payable on the UK debt. Let me just get that for you. So the debt interest payments, this is from the Budget of Responsibility. This is the official government site. And if we go down to here, you will see as shown below in the 24-25, we expect debt interest spending to total 104 billion. And this is the problem. All of the fiat currencies for every country you can think of are so devalued from the last 40, 50 years. Fiat currency only generally lasts 40 to 50 years. It's not backed by gold. And here we're seeing the net effects of this. We've got the US with 36 trillion of debt. We're just under 3 trillion of debt. And what's the annual interest payments on the US? There you go. It's 1 trillion there for the US. Net interest on debt is over 1 trillion. And in the UK, we've got 104 billion. Which is obviously a massive amount. It's over 3%, 3.7% of national income there as well. So yeah, we have a problem, and as Gerald Celente says, you know, when all else fails, they take you to war, and this is why you're seeing all of this banging of war drums and alarm, because it creates the opportunity to either reset these things like they did in 1945. With the Bretton Woods Agreement, and then situations prior to that as well. So no surprise to see all of this banging on about war and all the rest of it. There's no pleasure in actually reporting this, but if you understand the monetary system, you can see exactly why it's going on. So yeah, not cheery stuff, I know, but that's why you're seeing what you're seeing. Today we've got UK GDP. We had our friend out yesterday, Rachel from Accounts, with a 300 billion spending plan, but no money in the coffers to actually spend that money. So again, another 300 billion to be added to the debt. We've got core PPI out also for the US PPI and unemployment claims. So you can see how things are hotting up, things falling apart. Look at Ireland. You know, it's starting to really change somewhat. But anyway, let's move on and have a look at the markets. That's what it's about, as opposed to the political side of it. But of course, one drives the other. So let's have a look at the Dow. So the Dow yesterday, it's sort of sideways. You can see their prices moving to the downside. There's some selling around. We are overbought as well. Market trying to get back above the 5-bar moving average. When you consider that yesterday's CPI numbers were good, in fact, let's just have a quick look at those. I forgot to mention those. You'll see them coming in a lot softer there. They came in at 130, which you can see there, 0.1, 0.1 and 2.4 instead of 2.5, so 0.1 change there as well. That was good news for the market, but it didn't last for long, as you can see there. The market spiking up and then coming all the way down, and then to the close last night. Whether this is the rumour of Israel going to war with Iran without any sort of consultation with any other countries, You can see why the market has moved down, and you can see it's just trying to get back off the low there. So yeah, not good for the markets, starting to change their tone based upon this latest news that's coming out. So have a look at the German DAX with regard to this as well. So German DAX for the last 4 days is failing to close above its previous day's high. We're now heading to the support that we can see here. Just draw that in just to give you a number. So the number you're looking for is 23,735, and the market needs to stay above this level if at all possible. If not, the next downside target is going to be the 50 EMA in the daily chart. 30-minute chart, you can see the spike to the upside with the interest rates. The market managing to move up yesterday morning, but there you can see the decline past yesterday's low on the overnight as well, heading towards the S1. Market needs to get back above the low in order to move back to the upside here. In the S&P as well, we've got a bit of selling coming into the market yesterday. We're now coiling with the stochastics. Momentum has disappeared on the upside. We just need to stay above the 5-bar moving average if we're any chance to get above the 60.51 level there. The 30-minute chart, again, you can see the positive response to the CPI numbers, then the market retraces and then moves to the downside. And again, just coming off the low, 200 MA as well. And you can see the buying coming in there. Momentum moving up nicely, so we may get a bit of a reprieve in this morning's session. Meanwhile, in the UK, Rachel from Accounts had a spending budget yesterday, 300 billion, and the market's not seeing too much fun in this at the moment. Prices below the 5-bar moving average as well. We know it's all smoke and mirrors, not a nonsense. That's how it works in politics, and particularly from number 11 Downing Street. Never spoke about the interest on the debt or anything like that. It's always kept to one side. So choppy yesterday, and then moving lower, and again you can see prices desperate to stay above yesterday's low, which is a really important level. Meanwhile, the US dollar turned around and went south yesterday with the release of the CPI numbers, which I mentioned yesterday. Obviously, if the CPI drops, it takes the shine off the US dollar. There's also a bit of a gap created here as well that may need to be filled, and we spoke about this in the gold-silver ratio, which we'll look at in just a moment. But speaking of metals, let's have a look at those. So in silver yesterday, a bit of selling around, positions being closed, but the market has held. It hasn't sold off. Maybe lent by the softer than CPI numbers supporting the market there. But we still need to get through the 36,881 in order to move higher. 30-minute chart, very choppy. They tried to slam the price yesterday morning. We then had the CPI numbers, which were softer, but then they still slammed the market, and then the market moving lower. But overnight in Asia, prices moving back up again and back above the DP. We just need to take out yesterday's high in order to keep moving higher. Now there's some momentum behind silver, and of course if we have a look at gold, this moving back up obviously with the war drums in the background there, and also obviously looking to get back to $3,500 an ounce as well. And because that momentum that we have in silver, where it's broken out in gold didn't, we could actually see an acceleration to the upside in silver. Let's just have a look at the gold-silver ratio and see what this is actually saying. So, as I mentioned in yesterday's report, you could expect the gold-silver ratio to move higher yesterday. That's exactly what's happened. May change a bit today, but you'll see, as I barked on about for the last few days, filling the gap. The gap has now been filled, so we could see a resumption to the downside if we get a follow-through. If the momentum in gold is sufficient to drag along the price of silver, which it appears to be at the moment. Let's have a quick look at yesterday's trades, which was again choppy, the market waiting with those CPI numbers, but let's have a look. And as you can see here, we kicked off with the market just trading sideways in a range, and a lot of volume coming in to begin with, but not a lot happening after this. You can see sideways there, not even filling the sell order, moving back just in a range. And again, we had another potential buy signal here, but the market didn't fill that either within 3 bars. But then it did break out to the upside up to the DP, and we might as well just move forward here because really quiet. We had a potential buy. The market wasn't interested and then moved sideways, and you can see. But I did pre-warn that this was likely to happen as the market waited for those CPI numbers, which came out at 1:30. Now, I don't know what this bar here is, whether it was some sort of news release. Had a look but couldn't find anything at the time. So unless somebody had got the news about the CPI numbers beforehand, I don't know. But then you wouldn't have had this reaction like this if that were the case. But CPI numbers out, better than forecast, softer than what they expecting as well. And then the market just stuck in this range. These bars are so tiny. They're 5 and 6 points. Not a lot going on at all. We then drift down to the low as the US opens. We had a small buy signal there to the upside, followed by a second one. And then the market just stuck in that range. And then again, we had, I don't know whether this is the Israelis threatening Iran, but the market just fell out of bed there and then came back. And you can see how desperate they were to bring the market back off the low. As soon as it hit the low, there was orders to the left. And obviously more there, massive volume just as we head into the close to bring the market back. And that's how they do it. And then we retest. And again, you can see them trying to desperately keeping the market above the low there as you went into the evening. And again, you can see all of the spikes at these levels. It shows you exactly where those buy orders are. But if there's no follow through on the upside, then the market will just drift. And there's no reason for that to happen during the evening. There was no other economic news. Okay, that's it for this one. There's a lot happening, so be aware today. Anything if Israel make any sort of irresponsible attack against Iran, then God forbid there'll be carnage because all of the war sector seems to be escalating, doesn't it? Right, sorry it's not a cheery one, but it's the reality, unfortunately, we're all facing at the moment, whether it's fiscally or from geopolitical events as well. Right, have a great day as much as you can in these interesting times and challenging times. And as ever, thanks for watching. See you in the next one.